Hello everybody, and welcome to Understanding Binary Options. This video is part one, the novice view, which deals with binary option trading and some of the profit loss models underlying the trading that occurs on several websites from the perspective of someone who has little or no experience in this area, or in other words, is a novice. So let's start by understanding how binary option trading works. Essentially, we have a commodity, and that could be anything. It could be gold, silver, it could be a foreign exchange metric, such as the euro to the US dollar ratio. It could be a stock, it could be an index. Each of these has a current value, a value right now at any given point in time, before we're ready to make a bid or a trade. Binary option trading relies on our ability to predict what that value is going to be sometime in the future. So given a current value, what we do is we estimate what that future value is going to be at a given time, say t. We call if we think the value is actually going to go up. So given the value right now, we call if we think that the future value is going to be greater than the current value. On the other hand, we put if we think that the future value is actually going to go down. Being right means we earn a profit, but being wrong means we incur a loss. Therefore, if the future value is greater than the current value, and we had called, we're happy. But if we put, we're actually sad because we lost some money. On the other hand, if the future value is less than the current value, then the desirable outcomes are reversed. If the future value is exactly equal to what the current value is, that's the value didn't go up or it didn't go down, there is no gain or loss either way. So, supposing we're right, we gain a percentage of what we put in, which across from site to site and trade to trade varies from about 67% to 81%. But if we are wrong, we lose all of what we put in. And for those of us who are interested, there's two examples here. I'm not going to go into them in detail, but we can always pause the video and take a look at them. Plowing on ahead, it's important to set expectations for for those of us who hope to make money off of binary option trading, and we do so via mathematical models. There's really two important quantities here that we're interested in. That's the initial amount we invest, that's given by A, and the rate of return, R, which is a number between 0 and 1, expressed in percentages, we just multiply it by 100. For example, 80% is actually 0.8, and 67% is 0.67. If we're correct, we profit by the initial amount we invest times the rate of return, and our total investment amount after the binary option trading is done is our initial investment plus the amount we profited, which is A times 1 plus R given by the total amount in the green rectangle. But if we're wrong, we lose all of our investment. That is to say, our return is negative A, we lose all of it, and our total investment value is we lost everything, 0. That's the amount in the red rectangle. Let's bring two more quantities in here. Let's denote the probability of being correct. And again, the probability is a number between 0 and 1. The probability of being correct is denoted by prob C, which is given in the green rectangle, and the probability of being wrong is given by prob W, which is in the red rectangle. The expected return is therefore given by the probability of being correct times the return on being correct, plus the probability of being wrong times the return of being wrong. And if we annotate these terms, it looks something like this. And if we consolidate that equation, it looks like what's given by the term in the light blue rectangle. That's our expected return. Taking this into account, our expected investment value is the original value of our investment plus the expected return, which sums up to the amount in the light gold rectangle over there. So let's assume that we have no expertise or very little prior knowledge in binary option trading, which is to say that each of our investments is independent of the other. We don't have any reason to believe that we would be correct more often than we would be wrong, and we don't have the ability to leverage a bad investment to subsequently make a good investment. In such a scenario, it's safe to say that the probability of being correct is equal to the probability of being wrong, and that they're both equal to half. In this particular scenario, we're ignoring the case where we're neither correct nor incorrect. Therefore, the future value at the future time is equal to the current value. We neither made a loss nor a gain because this value is irrelevant from a profit or loss standpoint. Therefore, it's safe to assume that the probability of being correct is equal to the probability of being wrong, and both are equal to half. In such a scenario, the expected return is given by the term according to the formula we had earlier described. What's important to note in that formula is that unless the rate of return is greater than or equal to 1, the total expected return will be negative, which means on average our return is going to take away more from our investment than it gives to it. Now, intuitively, putting the math aside, that's not surprising because if you think about it, when we're right, we get a percentage of the profit. But if we're wrong, we lose all of what we put in. Now, we're not sure if we're going to be right any more times than we're going to be wrong. Therefore, on average, if we look at the expected total return, we're going to actually lose money based on this model of binary trading. Let's take a look at the example where you place a 30-minute call for $100 on gold and the rate of return is 81%. That is to say that R is 0.81. What this means is that the current value for gold is $100, and we place a call option, which is to say that in 30 minutes we think that the value of gold will be more than $100, and the rate of return is 81%. The expected return here is negative 9.5, which means the expected value of our investment is 90.5. Now be very careful. This does not mean that if we place any odd bet, we expect a result in $90.5 and we're going to lose $9.5 every time. This just means on average, even if we make profits a certain number of times, given a holistic view, given a picture of all the bets we make, on average we expect to lose that amount. This 90.5 is of course less than what we put in. Therefore, we expect to incur a loss on average, given this model of binary trading. So let's assume that we have some expertise or some prior knowledge. How sure of being correct do we have to be just in order to break even? In other words, what does the probability of our being correct have to be? So in order to do that, we can set our expected return to be 0, which is to say we don't make a profit or we don't make a loss, we break even. Given our earlier formula, we get probability of being correct as 1 over r plus 1, and some of the math used to derive that is given on the right for those of us who are interested. But what it boils down to is that the probability of being correct is inversely proportional to our rate of return. Now what that means is that the lower the rate of return, and 67% for example is less than 81%, the lower the rate of return, the higher confidence we need to have in our being correct, in our ability to make the right choice, just in order to break even. So let's take a look at another example. Let's say the rate of return is 81%. That is to say that R is 0.81. That means that in order to break even, we need to be correct 55.25% of the time. Very clearly, we need to be sure that we would be right more often than we would be wrong. 55.25% to be specific, in order to break even, mind you. Now, if R is equal to 0.67, which is to say that it's just a 67% return, then our probability of being correct actually needs to be higher. It needs to be 59.88% just to break even. So, what's the general verdict in such a situation? Even when the rate of return is high, and 81% is pretty high, if the rate of return is being 81%, we would still need to be sure that we're correct at least 55.25% of the time just in order to break even. We cannot turn a profit unless we're sure that we will be correct more often than we're not, and not just more often, but more than 55.25% of the time. We have to be sure that we're right. When we call, the value actually needs to be higher, and when we put, the value actually needs to be lower. As such, without any prior expertise, the risk outweighs the rewards, which is to say, for people who have little or no experience in this area and don't know how to gauge whether the decisions they're making are actually good or not, overall, on average, they're going to end up losing more money than they're going to end up making. So overall, I would say that the binary option trading is not for those who don't have a lot of knowledge in this area and for those who are novices or who don't have any particular strategy. And I think that concludes our video for now. And in subsequent videos, we're going to take a look at strategies where people do know a little more about what they're doing or have some prior knowledge. But of course, that involves a different set of mathematical models and a different set of strategies, and therefore we'll be a little bit more involved in the math, which is why it's a good idea to separate that in a different video. I hope this one was informative for you guys, and just to give you a little context, the reason this video was created is because me and a friend, we actually went ahead and gave some of the websites which facilitate binary option trading a chance, sites such as TradeRush and OptionsClick, and we ended up losing a lot of money, and we felt the need to sort of delve into this and establish exactly what's good practice and what's not good practice. And when we started with binary option trading, we had no idea what we were doing, and we ended up losing $1,600 in one night. And that, I guess, irritated, motivated us, frustrated us to the extent where we felt the need to make this video. And in whatever little context or whatever little substance, I hope this video was of use to some of you. Therefore, for if you take anything away from this video, supposing you don't have any idea what you're doing and you just came across binary option trading because you saw some video online or you saw an ad online that said you could make a lot of money in a very little amount of time, please think twice about it. And I hope this video helps you realize that overall, given taking everything into consideration, it's very, very difficult to make money off of this kind of binary option trading. And on average, you're going to lose more than you're going to get without having a plan in mind. Thank you.